Bill Gates became the largest private owner of agricultural land in the United States. This, of course, did not go unnoticed, and some began to call him Farmer Bill. But what business is behind this, and what prompted the founder of Microsoft to invest in farmland and farms? Hello, and welcome back to Business Secret. Today, we're discussing why a billionaire should invest in agricultural land. Before delving into the financial analysis of Bill Gates' investment, let's understand what we're talking about. Agricultural land in the United States falls into two categories, and prices vary based on the category. Prices are calculated per acre and depend on numerous different factors. The first category pertains to pastures and livestock farming. The second category involves cultivated land. The latter is also the more valuable category, with higher prices. In 2020, while an acre of pasture was worth $1,400, an acre of cultivated land was valued at $4,000. The average cost of an acre in America is around $3,000. To put it in perspective, an acre is approximately 0.4 hectares, which equates to 10,000 square meters. Consider that a soccer field is about 7,000 square meters, so a soccer field is nearly 2 acres. In the United States, around 40% of land consists of agricultural land, totaling approximately 900 million acres. So, what does America do with all these acres? We're talking about agricultural land, including farms, gardens, livestock raising, and everything related to agriculture. Specifically, 60% of landowners personally work on their own land, while the remaining 40% is leased by farmers to third parties, or the land is leased to landlords who don't work the land themselves. As you can imagine, Bill Gates didn't purchase a whopping 269,000 acres across 18 different states to go and work the land himself. Similarly, 31% of all American agricultural land is owned by corporations, trusts, or other individuals who have no intention of planting crops. According to data from the 2014 U.S. Census of Agriculture, many non-working landowners inherited the property or acquired it through family connections. Only 35% of landowners bought their land from someone unrelated. These are likely the external investors looking to purchase land. Once the land is acquired, various activities can commence. In Gates' land holdings, onions, carrots, and especially potatoes are cultivated. And why potatoes? Well, America needs to be fed, and potatoes are among the crops used to supply McDonald's. Yes, you heard it right, Bill Gates grows potatoes for McDonald's. Unfortunately, the exact production volume and revenue figures aren't available, but for now, we'll settle for this information. Later, we'll delve into where the money truly flows in this business. Through various companies, Gates has managed to amass agricultural land across the United States, spanning 18 states to be precise. However, he doesn't personally manage his investments. That role falls to Michael Larson. Larson is the head of Cascade Investments, the company that handles Gates' wealth. According to Bloomberg, Bill Gates' net worth is around $115 billion. A significant portion of this wealth is entrusted to Cascade Investments. The wealth primarily includes a 1.3% stake in Microsoft, valued at $28 billion. This stake remains from his original 45% ownership when Microsoft went public. This original stake has diluted over the years and has been sold off in part to diversify the portfolio. The rest of the wealth comprises $40 billion in cash, the destination of which is hard to trace. The remaining $47 billion is known to be invested in various public and private activities. The second largest investment after Microsoft was made in the Four Seasons hotel chain. Cascade has also invested in waste management through Republic Services and in transportation by acquiring a significant stake in the Canadian National Railway. While the major investments lie elsewhere, a small portion of Cascade's investment portfolio has gone into agricultural land. But why would Michael Larson ever go to Bill Gates and suggest that to grow his wealth, he should invest in agriculture? To understand this, let's look at it purely from an economic standpoint. The first thing that comes to mind is the business activity to be carried out on the chosen land, cultivation, livestock, and other activities that fall under the primary sector of the economy, historically not very lucrative. But where's the value? The value is in the land. Think of a plot of land as an investment, a tangible asset. Land in a specific condition is a finite resource, scarce. And like anything with a limit, the higher the demand, the higher the price. This is because the supply is fixed. Some have tried to emulate this mechanism online. They sold pixels on their websites for advertising, as seen in the $1 Million Home page. Others have created virtual land to sell digital plots, like Earth 2. In both cases, the price of each unit put up for sale started to rise as demand grew and supply became scarcer. Similarly, good agricultural land is in short supply. Each piece of land has unique characteristics, including soil types, slope, proximity to water, and many other factors that contribute to determining its price. It's not a liquid market. You can't buy and sell land as easily as you would stocks in financial markets. To buy a piece of land, you have to find a seller, negotiate, conduct all the necessary assessments, and all of this naturally takes a lot of time. However, this has a positive effect due to the limited transactions. Prices take a long time to change. Moreover, land prices aren't closely tied to financial market prices. They rely more on the parameters we discussed earlier and the actual needs of individual farmers. So, investing in agricultural land is excellent for diversifying one's investments. Prices remain stable and mostly don't follow the fluctuations of financial markets. But the advantages don't stop here. In particular, the advantages are not limited to those who have a substantial amount of money to invest, such as a billionaire's fortune. If a billionaire were to invest in the stock market, like you or I would, it would be extremely complex. Investing tens of millions of dollars without attracting attention would take a lot of time. If the billionaire started buying shares in a company with such a significant amount of money, it would certainly not go unnoticed. Massive orders would appear in the markets. Other market participants would notice this and start demanding higher prices. This means that the billionaire's mere intervention could significantly drive up the stock price, making the investment less profitable. So why not buy something with a very high list price? Even if you're buying tens of thousands of acres, you're still talking about tens of millions of dollars just to initiate the transaction. This approach can help address the issue of having limited maneuverability in financial markets. By investing in something widespread and with a very high price, you can potentially avoid causing drastic price changes. On the other hand, stocks and other financial instruments can be bought more easily. It costs less to buy them, and it's easier to find a willing seller to complete the transaction. However, it doesn't necessarily mean they're the best investments, especially in a highly volatile market. This is where agricultural land starts to make sense. Yes, because the annual yield is stable and enduring. According to Steve Brewer, the president of People's Company, the annual yield of agricultural land is around 2.5% on average. His company provides consultancy services in the agricultural sector, catering to both landowners and farmers. Perhaps the yield might seem a bit low, but it's consistent, and we know that this is valuable from the perspective of compound returns. In 2006, the value of an acre was $1,830, while in 2020, it had risen to $3,160, representing a 70% growth over 14 years. Of course, it's not quite comparable to the S&P 500, which more than doubled in the same period. However, the stock market had to weather two significant crises during that time. In the meantime, the price of agricultural land has remained relatively constant. It has continued to grow steadily over time, which is why many farmers use their land as a guarantee for their retirement. Their investment is tied to the land. When they become too old, they lease their land to younger farmers who can work it. Retired agricultural entrepreneurs make up 38% of landowners who lease their land. They largely offer their lands to individuals under 34 years old who work on leased land. The hope is to become owners themselves and continue the cycle. The influx of young people and new technologies should drive the sector toward increased productivity. It will become easier to cultivate more food at lower costs. And where does all this productivity lead? Looking at sector indices, we see sustained growth over time that appears to have room for improvement. This trend has not gone unnoticed by analysts. The Financial Times highlights that, while productivity prospects are important, there's another aspect that's even more interesting. The world of funds and investments is increasingly focusing on sustainability. Various industries have had to start paying taxes based on pollution levels. Agricultural land investments, however, offer low carbon emissions and can even become carbon neutral. But why does this matter? Has Wall Street suddenly become a lover of nature? Perhaps yes. But not only that, many analysts expect that soon there will be laws specifying permissible carbon emissions, taxes to pay in case of exceeding limits, and incentives for preserving biodiversity. If you pollute, you pay. If you farm more efficiently, you're rewarded. All of these factors should somehow favor investments in agricultural land. Suddenly, farms and cultivations become an excellent way to improve the portfolios of funds. Why? Because they could reduce the overall environmental impact of the investment portfolio. With their positive scores, they could balance out other, less environmentally friendly investments. This should lead to lower pollution taxes that might otherwise erode profits. In short, there are fewer risks on the horizon. So, perhaps Farmer Bill didn't have such a bad idea after all. Could it be that in recent years, the managers of his wealth have been focusing precisely on this? We can't say for certain. But if you've formed an opinion, feel free to leave it in the comments. That's all for today. This is Business Secret, and we'll see you next time. Goodbye.